In this video, I want to introduce an amazing indicator on TradingView that will blow your mind. I'm going to teach you a very accurate trading strategy based on this, so make sure you watch this video until the end and let's get started. Before we add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicator to our chart, here we click on indicators and we search SMI MFI. This one, Stochastic Momentum Index of Money Flow Index, which is an editor specs indicator and written by Andre 007. Alright, this is the indicator and as you can see it's added here below the chart. This indicator is built based on two powerful indicators, Stochastic Momentum Index and Money Flow Index. As you know, Stochastic Momentum Index is very powerful oscillator that is perfect for measuring momentum, and Money Flow Index is a very famous indicator that helps you to measure buying and selling pressure based on the money flow in the market. And now these two indicators are combined together to effectively help us with price direction and strength of momentum. In this indicator, Money Flow Index is considered as an input for Stochastic Momentum Index. This means that instead of using price, the Stochastic Momentum Index is measuring momentum based on buying or selling pressure that is derived from money flow in the market. And this is the main reason that this indicator is very accurate. Alright, now let's see what we have here in this indicator and how we can use them for trading. But before we start, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, this line that you see here is SMI MFI line, and this line is its signal line, which is actually a moving average of SMI MFI line with length of 8. When SMI MFI line crosses above the signal line, it's a bullish signal and the area between the two lines becomes blue. And when the SMI MFI line crosses below its signal line, it's a bearish signal and the area between the two lines becomes red. There is also a histogram here at the center of the indicator, which shows the momentum changes between the two lines. In other words, each bar in this histogram is the distance between the two lines. When there is a bullish crossover between the two lines, the bars go above the center line, and when there is a bearish crossover between the two lines, the bars go below the center line. The structure of the indicator is exactly like MACD, but here the indicator is different, and as I explained, it is based on Stochastic Momentum Index and Money Flow Index. If you know Stochastic Momentum Index, the level 40 and minus 40 are important levels, and crossing of the line below 40 is considered a sell signal, and crossing of the line above minus 40 is considered a buy signal. Here in this indicator, 40 and minus 40 are shown by the help of these dashed lines, but the excellent feature of this indicator is that we are not limited to these fixed levels at 40 and minus 40. And the indicator also offers a dynamic line, which are these blue and red lines, and they are moving around 40 and minus 40, which depends on the market condition. Similarly here, when SMI MFI line goes above the top line, this dynamic blue line, it is considered overbought, and crossing back below the line is considered a sell signal. And on the other hand, when SMI MFI line goes below the dynamic level, it is considered oversold, and crossing back above this level is considered a buy signal. In these situations, when SMI MFI line goes above the dynamic line and then crosses below the signal line, the indicator shows these red dots as sell signal. And on the other hand, when SMI MFI line goes below the dynamic level and then crosses back above the signal line, the indicator shows these green dots as buy signal. In other times, when there is a crossover between SMI MFI line and its signal line, but this is happening between the dynamic lines, the indicator shows these diamonds for the crossover signals, orange diamonds for sell signal and blue diamonds for buy signal. But not all of these signals are profitable, and you may just experience experience a small movement of the price after some of them, but with others, larger movements of the price, and that is what we want. We want the signals that have higher probability of success. Between these two types of signals that the indicator offers, the ones that are happening beyond the dynamic levels are considered more accurate and more profitable because they show overbought or oversold, so more probability of reversal. The best signals are the ones that are taken in the same direction with the current trend of the market. The most effective way for trend identification is price action analysis, but there are also some indicators that can help you on this to identify trends in the market. One good matching indicator that we can use is pivot point super trend, this one, which is an editor specs indicator and written by Lonesome the Blue. Alright, this is the indicator, and as you can see, it's overlaid on the price chart. We use this indicator for trend identification, not buy sell signals. When it is red, the market is trending down and we look for short position opportunities, and on the other hand, when it is green, the market is trending up and we look for long position opportunities. And for identifying buy sell signals, we use this indicator. We use the signals where the SMI MFI line was already above the dynamic level or below the dynamic level. Let me show how you trade based on this. When super trend is red, we only take sell signals. We don't take buy signals because they are against the current trend of the market. And we try to take the signals that SMI MFI line goes above the dynamic level. In other words, we focus on the signals that are in the form of a dot like this, and then we enter a short position only when the SMI MFI line is closed back below the dynamic line. In this case, this bearish crossover happened below the dynamic line, so here the sell signal is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss for this trade is placed above the super trend line, or in cases that you feel it is far from your trade entry, you can set it above the previous swing high and profit target at 1.5 risk to reward ratio. Moving on the chart here, again you can see that SMI MFI line went above the dynamic line and then we got a crossover signal at this point, but the SMI MFI line didn't go below the dynamic line as you can see, and again here we got another sell signal, and this time the line is already below the dynamic level, so here the sell signal is confirmed and we can enter a short position at this point when the new candle is opened. The stop loss above the super trend line and profit target at 1.5 risk to reward ratio. And on the other hand, when super trend is green, we focus only on buy signals where the SMI MFI line goes below the dynamic line and then it crosses above its signal line. When the crossing happened, we should wait until the SMI MFI line is closed back above the dynamic line. In this case, after crossing, it is already above the dynamic line, so here the buy signal is confirmed and we can enter a long position at this point when the new candle is opened. The stop loss below the super trend line and profit target at 1.5 risk to reward ratio. Again here we have another buy signal, and at this point the line is closed back above the dynamic line, so here the buy signal is confirmed and we can enter a long position at this point when the new candle is opened. The stop loss below the super trend line and profit target at 1.5 risk to reward ratio. This is also a profitable trade, but for this signal here, which is a confirmed signal, it is a false signal. You can see that the price didn't advance after that and we had reversal of the price to a downtrend. Encountering these types of false signals is completely normal in trend following strategies. This is a trend following strategy, and in two situations you may get false signals. One is when a reversal is happening in the market, and before that, in the last movement of the price, you may enter a position, and the other situation is when the market is not trending. In other words, the market is in a trading range and the price is moving flat. And you should also be careful when the market is not trending. By the help of price action trading concepts, you can effectively identify non-trending markets, but there are also some indicators like ADX or Andean oscillator that can help you on this. But please pay attention that you can never avoid all of the false signals. This is not possible in reality, and even if you have the most perfect setup with many confirming signals, the market condition can suddenly change. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.